All right, everyone, as you file in, we are just getting situated out here in Arizona. Thank you for your patience. We started a little late. We had a glare. Give us 1 second. Do a mic test.
Don't test me. Testing.
TJ, sound good? Can someone in the audience chat what sounds good or not?
I am the tallest man ever, especially when I'm standing on my ego.
Yeah, they can hear us. Great. Thank you.
Magnificent. Thank you, guys. All right, let's go ahead and get started.
Okay. All right. October 20th, take on the market. Very impromptu. Take 4. Thank you, guys. Yeah, this is like the 5th spot that we've tried to find the right background, etc. I'll be your host. My name is Scott St. Clair. I am the manager of the premium products. It's still hard. This professional. It's already, we've already done it. Music is not appropriate. Dude, you look like an accident. Explicit lyrics. Can't have that, guys. Sorry.
We're gonna see. We're gonna need the doctor to do an exam here.
All right. Disclaimer. I'm not licensed. I don't believe anybody sitting here is licensed. We're not going to give you buy, sell, hold recommendations. It's all for educational and in this case, fun. This one's for fun. Don't at me on this one, please. I know you guys like to email me, good, bad, or indifferent. Let's this one's off limits. Go ahead, Irusha, you have anything to say? Did you want to say anything from a disclaimer standpoint?
I am so elated to be here, dude.
Okay,
Fired up.
Yeah, just assume that anything that we talk about on long, short, and neutral.
Likewise, yeah, it's all educational. You definitely don't want to listen to us.
Okay, great. All right.
Just assume we're long and short, everything we discuss.
Yes. And neutral. All right, let's get to our charts. Hopefully you guys can see a chart of the NASDAQ. Come on, baby. Zoom share. All right, okay. Okay, well, let's start on that end and we'll work our way this way. Irusha on the market.
Yeah, so we are, I'm not sure what IBD has it right now. Yeah, I mean, it's under pressure, I'm assuming. I'm not sure if they've switched.
They will switch today.
Yeah, I mean, we could say we're in a correction here. Now, what I was watching was, is the NASDAQ going to undercut the lows and reset the count? All right, I mean, it's already looking bad, but I think that'd be good. You reset the count, you can set everything up, shake out even more weak holders like me. But that's really kind of the one thing. The NASDAQ was acting pretty well. It was looking like maybe it's going to find a double bottom. But now that looks like it's not going to happen. And so caution's advised. You just want to play defense at this point, in my opinion.
Jim?
The market is incredibly weak. There's new highs are being dwarfed by new lows. Breakouts have not worked. The follow through days, I think the follow through was nulled a bit back. Extremely cautious. I tweeted out a day or two ago. We could easily justify cash or 20% long or even short.
Yeah, that was a good tweet.
I did it. I mean, index AD is deep.
So we should blame you.
I would go the other way, whatever I say. But gold's starting to move. Earnings have been a minefield. JP Morgan, Morgan Stanley, Tesla. Like it just nothing is working. Like if Bill was here, I think he'd slap my hand and say, you know, you should be out of this fishing, man. That's my opinion. But I will tell you one other thing. If you look at the NASDAQ, there's 3 distinctive highs. And I bought a stock called SDLI off in Broadcom. The first stock I had, made a lot of money on it. And I bought a third over each of the 3 highs. And if this is just for me, it's like the setup that made me my first war chest money. So I'll never, ever forget it. If this crosses that high and with virality, I will start to buy for sure in thirds.
So something like this.
Yeah, all 3 of those peaks. Again, it must be accompanied by a lot of power and a lot of elite leaders, disruptive companies coming out at the same time, which is what our follow through day lacked. Whether you say we had one or didn't, it was not corroborated by leaders coming out all over the place, which made it weak, in my opinion.
Perfect. Mike, jump to you.
You're next.
Well, they hear me, you know, they know I'm bearish. So, you know,
We want all of you.
I've been bearish for a while. I tend to get bearish much faster than most people, admittedly. It helps me in some spots and hurts me in others. And it's helped me in this, this last couple of rallies. This one was a little bit better, but like Jim said, the leadership's just so lacking. And there's really nothing to buy. And I know that the market, the M in Ken Slim is very important. But I lean towards like what Mark Minervini says about like, if there were no indexes, what would you do? Would you just not trade, right? You would still look for stocks to buy, setups. And in this one, there were a few, but in this one, there's been very little to none. I think CrowdStrike was really probably the only stock I had that worked in this kind of move up.
And that wasn't a classic looking.
No, I had
phase.
to manufacture a buy point, and pretend that was a buy point. And actually whole nother story. Wall Street upgraded it. Everything else was down. CrowdStrike was opening higher. That's a sell to me. And so,
Yeah.
I mean, really, you're not going to get rich paying 173 and selling at whatever that was, 180 something. It's just there's just not a lot of umph in the market. There's not can't make a lot if that's the best stock in the market.
Yeah.
It's going to be pretty tough to make any money.
Yeah, and look at the weekly on that one real quick.
There's good no right.
So that's where it's just a little bit.
That's what I'm
Not flat, but it was one of the best looking things out there, which tells us something, right? If we can go back to the NASDAQ real quick.
And
So
daily or weekly?
daily, let's start with the daily with this. So when Charles Harris, Justin and I did the market school rules that are talked about on IBD Live a lot. We went through how to gradually get in when you have a follow through day and what to look for, on the good side as well as the bad side. And today is the key thing that put us back to zero, or essentially, if you follow market school, that's back to cash because we closed underneath the follow through day low. Can you point out the follow through day on it? Yeah, so that was a very important level that we could have undercut that today and then moved back up and we would have looked really good. Like imagine this bar that we had today, but flipped upside down and closing at the highs, we would be very, aggressive getting some positions on, but we closed like this right at this kind of logical level where it should, was trying to get down to the 13,000. But let's go look at SPY real quick, because this is kind of interesting. We all look at NASDAQ and Qs more, but I think the industry looks at SPY more, and it's stopped right at its 200-day. So I think there are a lot of ways to, kind of decide if something's in a bull market or in a bear market. But if you're above your 200-day, you can pretty much make some sort of argument that something's in a bull market. If you're underneath the 200-day, it's very hard to say you're in a bull market unless you're, ripping off the lows. So if we end up staying below the 200 next week, that's a really bad thing, even though the NASDAQ has held up better. Now, going back to the NASDAQ, we do have this possible 3 waves down. The bill we talk about a lot, like in March of 03, we were all very, very negative going into that because we've gotten chopped up. You remember all those follow throughs that failed. And then without regurgitating that story, on that third follow through, it looked just like what happened in 1932. And from there, even though the backdrop was very negative, then we launched and it was a completely different type of market. Things were working, unlike what we've seen lately. You buy something, you're up for 5 seconds, then it comes right back down. And so I'm staying optimistic the way Bill would, you mentioned what would Bill say, and we all know that Bill just changed on a dime. If he was with us, God willing, if he was with us and it was, he was talking about the market, he'd be super bearish right now. But 2 or 3 days from now, if things change, he would be even more bullish than he was bearish.
Mike, just very quick question on that, on the 3 weeks, the 3 waves down. Now, I only really started thinking about 3 years down just today when I was like, oh, that could be, but it's kind of shallow. Is that a little too shallow, or is there any kind of?
No, it's
That's-
not too
there's-
shallow.
it's not-
Let's look at NASDAQ in let's go to like April of 2003. And that last undercut was just a minor tiny little baby undercut right there.
Oh, okay, okay. That's
So that was, and that was a beautiful, beautiful time. I've talked about that many times.
The AD rank go to A way before the breakout though. Like the internals were way healthier than they are today at that point. Is that 2003?
That's 2003.
And right
Well,
now, they're D minus, D plus, E, whatever. We need, that was a same technically setup wise, but the internals of the market, I think, were very different than right now.
When you say the internals back then had a lot more time to kind of right the ship, whereas now, you know, what are we? Yeah, 10 weeks off the high, if that, something like that.
Well, I don't know. I mean, I think we've been in a bear market since 01.
like
I'm sorry,
February,
21.
yeah, like February of
20,
21.
when the advanced decline line peaked, I think that was it. You had the Magnificent Seven lead through 2021, but the internals were going really ugly.
So you think this rally right now was more of a bear market rally? I mean, I don't know what the percentage was off the lows, but obviously in 2000, 2001, there was one or two. That was
It's
like
shout out to my buddy Ajay, you know Ajay.
Yeah.
He
He's a great
told,
guy.
I met with him yesterday, Thursday, I think.
Is he in town?
Yeah, he's in LA town.
Oh, okay.
He's in the wrong town.
Okay.
But you know, he studies this stuff and he said that not for the NASDAQ, but for the S&P, if the August high turns out to be the high, if this turns out to be a bear market, you know, like the old school Wall Street way, 20%, blah, 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 whatever. This will be the second worst bull market in history from a magnitude standpoint.
No doubt, Ajay is the man. I love communicating with him. Pull up IWC, please.
What IWS?
IWC. It's
IWC.
micro cap.
Oh,
And
okay.
then let's go to what, 1 monthly.
Okay.
Is that it?
The iShares microcap ETF.
Why does it look like that?
Were you used to?
I'll go to weekly. I'm sorry, I said monthly. I meant weekly. I'm sorry.
Have you
Can you go to the weekly?
started drinking?
he's been drinking water.
No, wait till
Okay, is this a bull market? This thing made a new low.
that right there, is that a bull market in essence, right?
Well, we've been in a bear market for, we're on 31 months here. Look at IWM.
Yeah, IWM.
I mean, we're looking at NASDAQ, which is the most crazy, overly heavily weighted. Can you change the?
You want
It doesn't matter. I mean, how can this be a bull market when the
wanna see more of it?
What is, I mean,
so there's the peak in November 21.
okay, was that really a peak? That was a bull trap. I mean, the peak was right there for the advanced decline line.
Bull trap, huh?
We've been in a bear market for 31 months. How many people have made money since then?
In this arena, none, but you know, selectively, there's been areas, right?
You're quick. But yeah, but if you're
Short term,
Yeah.
if you're a short term trader, it's been great. If you're an intermediate term trend trader, it's been not quite so great.
For sure.
those who manage their equity curves a little bit quicker, as we'll see tomorrow.
I'm looking forward to watching.
Okay.
Thank you on that tomorrow. Well, look, there's obviously the major divergence between the small caps. And of course, the Mag 7 or, you know, whatever they're gonna call it next week, you know. I like FANG better, that name just sounded better than Magnificent 7, but anyways. IWM for the last 2.5 years has felt like, okay, it's finally gonna come on. It's gonna do a mean reversion and it's gonna catch up. And every time I was getting excited about IWM, it just came crashing back down. I do think that I try not to overthink it, but I do think that has something to do with the interest rate environment. When you compare a small company that needs to go and get capital now versus an Apple, or I don't want to mention any particular names, but the big cap ones who they have got tons of money that they're now making 5% plus on, and they don't have to go out there and raise money. So I think that's why the market was smart enough to see that ahead of time and go, okay, you know what, we're going into these, plus they have liquidity. We all know how important getting in and then getting out of something is. So I think it was kind of the perfect spot having those 7 or a little, a few more than just those 7. But yeah, I guess
stocks became, I mean, in the end, those stocks became defensive stocks, right?
Yeah.
Because if you look at staples, if you look at utilities, all these other kind of traditional defensive stocks that a lot of fund managers would try to run and hide, those all went away and didn't provide any protection. So it turned out that the Magnificent Seven was, hey, they're still generating good cash flow, they're still trending up, they're still, they're huge companies that generate lots of cash. Let's just park our money there.
Yeah.
Well,
Well, look at like the XLP and those types of stocks that you would think would be the place that you would buy if we're going into some really tough times, and they've been falling apart. I mean, falling apart.
The utility sector, right? XLU.
Well, the utilities make a little bit more sense just because of low yield saving, but with the,
Pay as much.
you know,
You can get 5 in a T-bond or whatever, why get 3 there?
exactly.
But XLP,
Especially if they have to go and raise at these levels.
Now with the staples also was, obviously with the weight loss drugs, those Ozempics and Eli Lilly.
It
No,
seems a
it-
little
It
overblown.
seems
thank
like,
you. What percentage of the population is using those?
I don't know anybody.
Versus what's going to,
Yeah, fair enough, but for Walmart to blame their sales on that seems a little,
and I agree, especially Walmart, because Walmart doesn't really have a demographic right now. That's going to really be, there's like $17,000 for Ozempic thing or something.
Is that what it costs?
Expensive, yeah. But that being said, we all know the markets can go way out of whack and overreact big time. We'll find out if it's an overreaction or not, or it's just a game changing thing. But that's another variable for staples is it's a lot of people are just getting worried about that. And so let's just park in video.
yeah, on investors.com.
I mean, just let's look at percentage gains in stocks that were up today, percentage gains. And then let's flip to the downside. It has been like this it's almost been like this every day for a year.
Is that the one?
Yeah,
Up on-
it's just good.
Hey, look at this cool webinar.
Yeah.
Yeah.
This guy-
I said, yeah, no,
I was pointing that to Jim like. No, we should get.
He's the best looking one of us and they don't.
Without it,
It's
you
a
should
really
see the
low
bump
bar.
show. Oh my God. Okay, look at
There it
this.
is.
Look at the percentage gains.
okay, let me share it with the audience. I didn't want them to see me fumbling about, so you guys made it known I was fumbling. So thanks.
Sorry.
All right,
Okay, so you've got. a couple
Yeah, I haven't shown up yet. There.
okay, there we go.
Your best stock's up 7%, and then you've got a 2%, a 4%. I mean, these are all what 1% or so. Let's look at the downside. Okay, look at these percentage
Wow,
losers.
so
And scroll down. There's a full page of these.
you all stocks?
Yeah, I mean, it's a slaughterhouse. And this has been the commonality almost all year. This is not just, now today it's accentuated a bit because of the sell-off, but it's been like this almost every single day, all year long. At the same time, new lows are drowning new highs almost every day all year. We had a few days this year where new highs exceeded new lows. That is, I mean, oh, yeah, now we're talking.
Stop showing the video.
Yeah, I can't control the video, I can only control the screen.
This is starting to shape up like last year.
Well, I should say,
I'll stick to my wife.
I did mention in video,
Yeah, I don't get
Eli Lilly, I do own small positions. in-
Here, I'm gonna.
Cheers.
Which one? To Bill? To Bill.
Oh, yeah. keep going.
Our first level 4 without Bill. Wow. Cheers. Cheers and to everyone watching. Cheers to you guys and to a bull market, but throw them down.
I don't know if I can. I want to wait.
Hey, so who wants mine?
I think that.
I think,
Wow.
I think Ropes needs an extra one.
Well,
Yeah,
How much you're in the man and I'll split it with three.
Thanks, John.
Hey, thank you.
Since we're drinking and some of us aren't, 233 days, no Diet Coke, no alcohol, no gluten.
Good for you.
How do you feel?
Say, I really.
I'll get you some good pasta and a beer, right back.
Oh, I wish, man.
Scott, how you doing Q&A? That's my fear.
Did you?
How do we do? We can't, we're not doing Q&A, because we have both on.
No, but people.
People send
You know, one thing,
There's 53 questions out.
I'll try to manage it. I'll let these guys talk.
can I, can we share the screen that I
Just
built?
and ask them.
Which,
Dude,
I did, this is your account.
Yeah,
so
this
is
is my,
it-
yeah, the brand.
Oh, this is it?
Yeah, the
Okay.
Webby's Kiss screen. So I just built this today.
My face is
Yeah.
good.
You and me, let's go.
You got, so. To the, open and edit,
We're gonna do it that way.
that way.
Review screen results, right? You want
Yeah,
to show
well,
this?
I wanted to see
Okay.
the screening criteria.
Okay,
So,
cheers. You guys do your thing, me and Mike are gonna talk markets over here.
Turn the camera.
everyone has a different way of looking at breadth. You know, I know you guys like the new highs, new lows, advanced and fine. I don't use that stuff at all. I don't have anything against it. Everyone just has their method of doing things. I like building screens and then running the same screens on a daily basis and going through it that way. And every day, really during IBD Live, because I watch you guys every day now, and I screen through about 1,300 stocks or so, things I would never trade. Just to get a feel for the market and for the things that you were saying about how bad the breadth really is, just a different visual for me. And I like sorting it by percent versus 50-day moving average or percent versus 200-day moving average. And if you spend that hour every day going through that, you really get a sense of how bad this market has been and how very few things have been leading. And it is really just those few. Some really good companies with good products, then their stocks are going down. So until that changes, and we start seeing it spread out, you know, I think it's going to be really tough to have those Mag 7 just continue leading. Now we could have something like during 1966 to 82, which that's the period that I think we're in, where you have the Nifty 50 and you had some rotating stocks that held up. You know, it had model book moves, but at the same time, the index is just chopped around back and forth. And so I think it's going to be tricky, but this is one screen for those people who don't want to look at 1,300 stocks every day. I just built this. It's a little bit, you know, quite a bit tighter, only 118 in there right now. If this was a healthy market, you know, we should see 300 or 400 or 500 stocks making it through the screen. That's my take. What do you guys think?
Well, just for
First
the,
of it, okay, one logistics, bear with us, you know, this is kind of off the cuff, so I know I'm gonna try to handle the sound a little bit better. That's the one thing I know you guys are having a hard time, so we'll try to improve the sound so everyone can hear. Right, thanks.
yeah, so I think the one thing that I would add, just kind of underneath the surface, and it's. There are, I want to say it's around 25% of stocks in both the NYSE and NASDAQ. They're above their 150-day moving average.
How much?
Only 25%.
That's, yeah.
I mean, it's, yeah, I mean, most of the stocks are, and the 150-day obviously is a very, very long-term moving average.
Yeah.
And so there has been a lot of weakness. It's actually lower than when it was back in March and May. So remember March, when we had the banking crisis, it's actually lower. than
Wow.
Well, did you see the bank stocks today?
No, I did.
Maybe pull up the KRE.
The bank stocks were getting creamed today.
Okay, I'm gonna pull up the chart of Carrie. And a lot of people are asking about Mike's screen. Do you mind sharing that?
Yeah, I built it for everyone.
But do you know how to share?
Mike doesn't.
I'm very sharing.
It's the biggest share of the table.
No, you
I'm gonna share it to the Market Smith community. You're okay with that?
That's
Okay.
Yeah.
So I'll share my Webby screen to the Market Smith community. So So it's basically the keep it simple screen, right?
Yeah,
Keep it simple screen. And I'm gonna put in. Keep it simple screen, Mike, okay, that way it helps with anyone who might. And I'm gonna tag Can Slim in there. And then let me see if I. Need to.
and while you're doing that, I've shared a lot of screens on Twitter over the years and on IBD Live. And the thing with screens is I tweak my screens every day. There's probably not 2 days that go by that I haven't tweaked at least a couple screens. It's I'm changing them, either liquidity, percent off high, percent, it's whatever the market's doing that I want to see more of to get a better sense. And so when I share a screen or you guys share screens, people should take them and adjust them. You know, don't feel like it's set in stone, because nothing is. And Market Smith, I think, has the simplest way to screen for stocks. You know, I don't see how you can do Can Slim without using the market, or Wander Canary like Ropes and I use. But for everyone else, I think you should use Market Smith to do your screening. You just can't trade with that.
And the big thing also, just even keep it more.
Hey, Jonathan, can I get my paycheck for that?
He did nothing.
Okay,
And
I
what,
get another water.
and to go off that, it's just consistency, right? I think the first part, especially for a number of people probably was on speaking, especially the ones who are newer. Even though the markets are bad, it is very important to have a simple, consistent routine. So Mike is running screens every day, seeing which stocks are resisting the downtrend the best. And a lot of times you're building up those watch lists. So when the market finally turns, a lot of times those are the ones that are gonna, some of those are gonna be potential next leaders.
Yeah, you have to have your watch list built all the time, because that gives you so much feedback, right, guys? I mean, it is, if you see your watch list is 15 names, it's telling you you're probably near the lows, because it's rare. I mean, I tend to have kind of a wide watch list. So if I only have 15, that's really, really small. My watch list right now, I haven't had a chance to purge it. I've got 78 stocks in there.
So hopefully everyone heard that. 78 stocks are on Mike's watch list coming into today, but after this weekend, it might be less.
Yeah.
And Mike, what's normal? What's kind of a normal?
And once it starts getting over 300, I start paring it back for watch list. And the team on IBD Live does a great job doing the universe watch list and the ready watch list. And that's something that I've done for well over two decades now, of having a universal list, which is just anything that remotely looks interesting to you put in there, but your ready list is something that could be bought if we get a fall through day. So even though we're all bearish right now, come Monday, things could change, and then we've got to look for something to buy. You have watch list ready, then you could be Johnny on the
So
spot.
most people right now.
Yeah.
Are turning away. They're giving up, they're ending their subscriptions. They're going, this doesn't work. It's been 3 years. I'm worn out. And this is exactly the time when you should be doing exactly what you're saying, because the people who are going to be here this weekend are the diehards. The people who are listening to this in the bottom, near about bottom of bear market, these are the people who are going to be there when the killing is made. And we are historically very, very close in duration and magnitude of a bear market. Now is the time.
Of an extreme bear.
Yeah, this is not a garden variety. Like if you said garden variety bear market, pull this rubber band like this, and it comes back a little bit. When you have a bear market like this, when it comes back, I think it's going to be really big. And look at the headlines today. I have to show you. There was a headline I sent to a friend out of and it just was like Trump insider turns against Trump. Gaza's lighting up. Lebanon's going to get involved. This headline in this paper was the New York, not New York Times, one of the more raggy ones, but I mean, the headlines was unbelievably bearish. It was really bearish. And look at the bank stocks.
I have KRMs.
Okay, look at. I'll just ramble off a few. Regions by RF, CMA,
Wow, I got down today. CMA.
the WAL, key. CFG. Look at that.
Yeah, new lows.
Okay, PACW, PACW. And you've got the 10-year. These, by the way, these are significant regional banks. These aren't like guppies down in the corner. Is the 10-year saying that the US has too much debt? The Fed controls short rates, but 10-year keeps going up. What's that saying about, is it inflation? Is it the level of debt to GDP? Why is the 10-year continuing to go up when it really looks like inflation's probably cooling? The market is looking at something else. And it's just when when the ultimate bull has a conversation like this, it's, oh, by the way, I am slightly net short. So there's monster signals right there. All those things I just showed you, those are all dark black. At the end, it's like, when Bush said in the dark hallway in the White House, this is the line in the sand.
Yeah.
And that was it. The bottom occurred, what, a week later? It was days later.
Yeah, that's always how it works. And, I can tell you in 09, it was very interesting because at the firm, at Bill's firm, there was what was called upstairs and downstairs. Upstairs was institutional, William O'Neill and Company and other sister companies, and downstairs was Market Smith and IBD. And there was typically a separation between them, and he liked it that way. But in maybe 2 or 3 weeks before the bottom in March of 09, he told me, he said he wanted to get everyone together, upstairs and downstairs, the top 40 people, to write a list of all the things that were wrong in the world. So he wanted like the Chris Gessels of the world, and then the top people, the Chucks and everyone else at William O'Neill, and then all the top people at IBD to all get in a room, which would have been unprecedented, to just talk about how the world was ending. And I thought the world was ending at that time. I mean, I was, getting ready to go buy a gun just in case the ATMs didn't work, and I had a pen for myself. And then, of course, then the market turned. And then we saw what happened from it. At that point, that was such an unusual bear market that the bases didn't look right. And the bases that did look right didn't work out. They broke out and failed. And it was the odd ones like the apples that had that weird kind of odd look. You can only tell that they were right because of their RS line. And what the RS was doing, and the market was hitting fresh lows, it was holding up. Just like what Bill did with AOL and Schwab back in 1998. I think you talked about that the other day.
Yeah, so here's like Baidu, right?
Yeah.
And I know this is one you did really well on, but it just relentless. How many weeks up in a row is that? It's like 16 weeks up in a row. But so if you're waiting for a base, you're waiting and waiting and waiting. Whereas if you might have to, change your strategy a little bit and say relative strength, we've had a follow through day, relative strength, this is leadership. Maybe I have to buy 3 weeks tight or pull back to the moving average or manufacture a buy point is what I like to say.
And that's what we did. We manufactured a lot.
I have to give a massive shout out to Eve Bobach, because she did a study, and I'm almost exclusively a new high buyer. She's like, Jim, you're gonna miss it. I mean, we battle internally at the shop. This is our major issue. She's like, look at the evidence. I'm like, evidence from evidence. I want to buy the new high. But I can't. I mean, I made a lot of money on that. I bought NVIDIA off the bottom too. I mean, it turned up, but I think I'm implementing a little bit too dogmatically.
You probably bought, I'm gonna guess, you can tell me, but I would guess you bought Baidu like either there or there, somewhere.
I started just off the bottom.
Oh, did you?
Yeah, and then when it was like,
Even in 09, huh? Well,
and then when it was like 5 weeks up, I really hit it hard. I think Eric Kroll had this also at the lows, and then when it all turned up.
So Jim, what were you seeing at that one? Was it the relative strength line?
Well, I know the company because of the IPO. It was so, and I just kept studying it. And then when the bear market jammed it down, the earnings continued to grow. But that wall of blue was just, I was like, oh my God. And it was after this horrible period to see that accumulation. I really loaded up on it,
you can stand behind us.
Yeah, no, yeah, some of us have work to do, right?
Yeah, this is work.
Sounds like work. I'm cool with that.
some of us haven't finished the presentation for tomorrow morning.
All right,
No, we have charts, charts, those IBD 50 charts don't do themselves.
so you're on camera.
No, Jonathan's like, oh, why didn't you just come on over? And it's like, hey, we saw a paper that we need to get out, right?
Wait,
So-
can we go back to the Baidu?
In I'm sorry, in that time period, the 09?
No, a little bit before that.
Okay,
This one right there.
oh, the first kind of move.
Yeah.
Okay.
So this is a very important concept, and I know that you were at this seminar, Brooks, but it was a level 4. And Bill talked about Baidu, and that cup, go forward, it's the cups, it's straight up from the bottom.
This breakout here or
Yeah.
further around?
Further, yeah.
You're doing a good job. I would
It
be
is.
nervous right now.
Right, yeah, right there.
Right here?
Yeah, do
All
the
right,
change
May-
date to that.
May 11.
So Bill had been harping on all the PMs about us not buying straight up from the bottom, right? And I was trying to figure out a way to program that into at that time into pattern rec to see if there was a way that I can do warning.
He wanted you to buy a strip off the bottom.
Did not want us
Yeah.
to. And in fact, we had many PM meetings where he marked up old model book stocks or SULP straight up from the bottom. Don't buy, don't buy, don't buy, don't buy. And he was harping with us. I remember one of them was Walmart back in the 70s or 80s. But anyways, there was a ton of them, and I was trying to ask them for specifics on it. And it was a mushy area. It was kind of like it when you see it.
Upset.
But when this Baidu came out, and we were it was at the level 4, and we were all in the back of the room, or you were always front row center at the level 4s. But we were up in the back, and he said, that's a perfect cup with handle. I looked at everyone around, what is still smoking, and give me some, because he had just got done with talking about the straight up at the bottom. But he was flexible enough to realize that there was something different. There was power as it was coming straight up from the bottom. And then it did just wait there a little bit for a few weeks. And then that changed. So just like I was saying about the custom screens, nothing is set in stone. Bill would change from, if you go back to how to make money in stocks version 1, edition 2, 3, and so on. He was making changes all the time. And so be flexible. And this is just, I always think about with the Baidu. Sorry, so to go up on that.
So 2 questions, just for fun, can you interact with the audience?
Wait, I gotta say, just switch over to Netflix for a second.
You remember when he said that, right?
Yeah, no, because I remember him talking about Netflix.
Oh, the double bottom?
Yeah, no. So Netflix, this was around 2000 and what, it was around 2010.
11. Oh,
Yeah, go with 2011, so you can see it there.
not-
Yeah, that's the base bill. No.
Oh, that one, yeah. that
Yeah,
one.
so out of
Yeah,
that cup
yeah.
right there, he, and this was a straight off the bottom, he thought, someone asked him about this one. And he said, this is the most powerful pattern
Yeah.
out there, and I was living on that point too. I was like,
I think you were in the back.
yeah, because I look at Matt, you remember Matt in a way, we
Yeah,
both look at each other, like, because we were just talking about that.
Yeah.
Like, we were debating, is that straight off the bottom or not? But that was an earnings gap, huge volume coming in. He said, and yeah, that is the most powerful breakout. And it happened during a correction. Of course, once the market got going, it started moving up again.
I gotta tell you one other thing.
It's worth going to it's worth going to the daily. Go ahead.
We're talking so much about technicals. What gripped me with Baidu was I had read, well, I think there's 1.3 billion people in the country and something like 30 million were online. And then I learned that 30,000 people a day were going online. And then I learned that Google said do no harm and the Chinese government blocked them. And then the Chinese government rerouted all the requests to go to Google to Baidu. And so I'm like, let me get this straight. There's 1.3 billion people, 30 million are online, 30,000 are going on a day. And the government is now rerouting everyone's Google search to Baidu. Yeah, I'm in. Like the fundamentals were so compelling to me. I'm like, well, this is like Broadcom. They made the chip for satellite, DSL, and cable. They're the only one. And I'm like, most people are on dial-up and they're all going to go to high speed. How does this not work? Like, I mean, unless something disintermediated it. So the fundamentals were so compelling. It's also helped me see that wall of blue and I'm like, yeah, I guess I know why Fidelity's, buying 300,000 a day every single day.
For weeks.
But look at, we don't have to go back, but it was like 18 weeks in a row, or something. I've never seen it like
What
that.
stuff if I do?
Yeah,
Yeah,
I mean,
But the key though is you combine both of them, right? Because there are a lot of fundamentals
Netflix.
where like people are gonna be very optimistic about the TAM and things like that, but you have to let the technicals tell you when to get in and when to get out with the charts. Use the fundamentals to narrow down the list of stocks to focus on and do research like Jim was doing, figuring out things like that. But you have to let the chart tell you when to get in and when to get out.
The fundamentals are wrong until the chart turns up. It's just wrong. You might be right, but if the institutions don't believe it at that moment, it's wrong. You're gonna get stopped out and chopped up.
So just so we can move on to another stock, I just wanted to show this Netflix real quick on a daily of how you would get into it. So let's say it gaps up on there and you're feeling that it's just straight up from the bottom.
let's animate.
Yeah,
Let's do that. We're gonna do a little animation. Oops, I went back too far.
and just to summarize what you were saying is essentially that China borrowed the golden goose for a little bit.
As communist as they are, they golden goosed it up a little bit.
You said that.
Okay, so there's starting from, okay, you don't own Netflix, it does this, now what?
Okay, at this point, if I know the story like you did with Baidu, I'm going to buy something. Because I'd rather buy something and be shaken out of it than not have any of it.
What is something? 1%, 3%, 5%?
Yeah, for me, it could be 1.5%. Just it's a token buy, and I hear you say all the time, like you buy 100 shares.
Yeah.
Something just to have it on the books. Bill would do that too. He would have something on the books just to. It was more when he was selling something, he would just kind of keep some remnants around. But you're not really getting serious about it until it gives you a proper buy point. So let's kind of play through. And I think we all love the upside reversals.
This is 2010, so it gaps up on earnings, and it actually gapped up in the middle of, I guess you'd call that a correction for sure. I don't know if you call it a bear market.
No, I think we're in a correction.
Yeah, you definitely were in a correction, okay?
Okay, so you're not buying, it's not giving you a signal. There,
Oops, reversal, right?
yeah,
I think
okay,
so.
upside reversals, so now you're buying it. And because I don't like to average down, I might have just blown out that 1.5% position. Just so I can start back fresh.
Re-enter this here, okay.
But other people, I know a lot of successful people that do average down. It's something, it's just a cardinal sin for me. Everyone has their different way of doing it. And you can think through logically how, if you're ever gonna average down, doing it when a gap up happens, to just get a toehold in there and then be increasing your position. I don't do that, but you can make an argument.
You can have a plan, like I want to own 1,000 shares, so you buy 200.
Yeah.
At 60, and then you buy 300 at 59.5, and you buy 300 at 58.
Yeah.
Your plan was to have 1,000 shares based on whatever your portfolio size is, and you could do it that way. It's different,
Yeah.
but
It can be like quicksand.
I've done that before. I do that off like the 50 day, because it's so hard to buy off the 50 day. It sometimes it stops before, sometimes it gets there, sometimes it goes below. So if I want 1,000 shares of XYZ and the 50 day is at 100, I might buy 200 at 101, 200 at 100, 400 at 99, and puke it all up at 95.
Yeah.
But or maybe yeah, exactly.
Because he buys it as it comes in. And there were other PMs, one other PM that I can think of that did that too, and they were very successful at it because it meshed with their personality. For me, as soon as I'm down on something, I'm like, I'm doing something wrong. Get me out.
Yeah,
Just get me out, and then I don't have a problem buying it back. What about you guys?
I'm like you. I feel like that's just how I started. When I started learning from Bill and reading the books, it's just amazing at how much harder it is for me to buy on weakness versus buying strength. Buying strength, that Netflix example there, I have no problem buying something on that earnings gap right there, because it's showing power. I see that over and over again. But buying, as Scott was describing, if it hits 59, 58, makes it a lot harder. I need to see the upside reversal.
Well, you bought the big gap up a few years ago, was it Zscaler that had what was the one that had, they did the texting for like Ubers and things. Twilio, you bought that big gap up.
I think I waited a little bit on that, but maybe I don't know, but I got into eventually.
How would you do it?
I think when you buy pullbacks, when it works, you're so far ahead of the game when the market turns up. In general, I don't buy anything when the market's ugly. So that Netflix gap up, I can't remember if I bought it or not, but it would have been hard for me to, that's not true. I probably impulsively would have bought it because the volume is so huge. But if the market itself isn't in an uptrend, I can't do anything. And buying pullbacks, I watch Charles intently watching them. Because I'm like, God, if I could buy the pullback when the market turned up, I'm going to be so far ahead of the game. I just haven't been able to make it gel. I think buying 50-day tests, recoveries of the 50 is such a messy affair where they get above, they go below, they wishy-washy around and then go. So I tend not to do that. And I'm missing out on a lot because you can't capture such an enormously bigger percentage of the move and you're way ahead of the game when the market turns. Like on the Netflix thing, it looks to me like the general market was still heading down.
Yeah, what was the NASDAQ and then
It made a lower low. It's very subtle on there, but yeah, it definitely made a lower low.
But I'm a hypocrite because I think of like the 8
Yeah, that was kind of hard to buy, man.
Yeah.
I bought them on massive gap ups and I paid way up. I've bought stocks up 20-30% for the day and they've gone on to go 200%.
Yeah.
So to me, it's a major buy signal. I think I just need the general market to be in gear. Of course, braver people can get in there.
Well, when you have any position in a stock that gaps up, I like to add to it. Now, I know you like to lock some in and just take it.
In general,
In
yes,
general.
yeah.
And you guys probably add to it.
I usually have.
You probably add to it. And so the thing is, there's not a right or wrong. It's you found your way, you found your way, you found your way, and I try to find my way. And so everyone listening, you should go through these stocks and do the animation, like Scott is, of going through and say, okay, put yourself back in that position. What would you do? And probably because the general market was so bad that you wouldn't be buying it. You know, honestly, because what if something gapped up today? Would you be buying it? Probably
You have to
not.
say, is it big enough to turn the whole market? Some little stock does it. I'm probably gonna be like, it's just not influential enough to run, but like, there was an earnings season and it was just bad. And also Amazon reports this blowout upturn. I'm like, that changed the market.
Move the mic.
What? It just changed the whole tenor of the whole market. The market supported Amazon's gap up and all of a sudden everything started to work. So it would have to be a stock as relevant as one of the Max 7 or maybe not quite that big enough.
Well, and I think that the other thing is, since we're talking about how everyone's trading differently and you have to kind of fit it to your own personality, you also have to realize that it's not going to work in every environment, right?
Yeah.
So if you're kind of used to, you'll do well in certain environments, but then there are other environments where it's not going to work as well. What a lot of people will do new, and I did this in the beginning too, is if you keep changing your strategy,
Jump around.
right? Yeah, so you want to be careful, you want to try to eventually, exactly, yeah. You want to eventually figure out a strategy that works for you, and then once again, try to be consistent.
Yeah, and just now that, so we can move on from the Netflix, this is where I would just gas it super hard.
And let's look at the NASDAQ at that moment. Looks
Really what I want.
looks much better, right? So I don't.
Maybe there's a fall through.
I mean, maybe in the old days, 1.38%. Maybe. I don't obviously can't remember. That's because this is 2010. It's possible that they, the market changed, blah, blah, blah. But
Wait, what was that day? How much was it up?
it was up 1.38%.
That's
Volume
more than
was
enough.
barely, the
More than-
volume was higher than this. So you have a fall through day.
Yeah.
And now look how Netflix looks, right? It looks so much stronger, right?
Yeah, so
Now, if you have a little bit, you're going to take it up a notch or two.
well, I would take it up significantly,
Yeah.
because now you have the gap up on the news, which I'm assuming was the earnings. You had your shakeout, you had your upside reversal that it held. Now you get the market at your back. And now it's going through that marked high, which is a very important level, and it's closing perfectly. So this is where you've done it really hard, because you know it should move up. And if it doesn't move right up from there, there's something wrong with that stock, and probably with the market. What did it do?
Risk reward is highly skewed in your favor. The asymmetry of buying like this over a lifetime of investing is monumental. Right? And so it did nothing the next day, but then boom, the next day after that.
Add more.
Hold on, wait. Are we gonna wrap this thing up?
Yeah, final thoughts. My battery's about to die.
Oh,
The battery's toast.
we're cutting this because of your battery?
Yes, sir. And because tomorrow's presentations aren't ready, we have rehearsals to do.
And guess what? Guess what? It's
Wants more drinks.
I know.
That's all it is.
It was just getting good, Scott. It was just getting good, Scott. Why did you guys cut it? Well, we're cutting it because Jonathan can't charge.
Jonathan Howard, final thoughts.
Really quick.
Alicia.
Until his battery just stops.
Yeah, let's just let it shut.
Final thoughts.
No. before-
Go until it dies.
Q&A. I apologize.
Let's go back to
You
the
haven't done a
market.
great job on the Q&A.
A
But-
great job? How about zero job?
Somebody asked about, you said you cut it. What does that mean? Okay, if you're wrong, cut it. What does that mean to you? Do you have a percentage or like where?
By cutting, you mean by.
Yeah, like reduce, does it have to, yeah, no, it means you're gone. Is it 3%? Is it 5%? Or is it, sometimes it's 3, sometimes it's 5, right?
I try to base it off of the chart.
Okay.
Off a logical level. That's me.
You, cutting losses.
It depends on the general market. Is everything failing? Is the market ugly? It's a matrix of multiple factors. Am I up for the year? How's my cushion? There's so many factors, but generally, I won't sell anything until I'm down 3%. I don't think if you don't give it 3%, it's not enough. Beyond 3, I could be out at 3, 4, 5% out of the whole thing.
Perfect.
But if the market's really strong, I might, risk.
If in your risking gains, let's say you're up 20% for the year, you're willing to be
If
down
I'm
15.
up 20% for the year, I'm gonna really give it a lot.
Okay,
I give it every possibility to succeed. I don't want to suffocate.
perfect. Arusha?
My average losses are usually 4 to 5%, so I'm kind of scaling up just like Jim's talking about. It's not all or none. I'm usually just slowly trying to scale out or slowly incrementally move in. That helps with the ebbs and flows, at least for me.
I love it, especially the all or none. If you have 1,000 shares and it's not acting right, sell 200. Just see what happens.
Dimmer switch, not
Yeah.
on off, dimmer switch.
I love that, dimmer switch. Okay, final thoughts, Mike. Oh, I apologize. Let me get to the current market.
Yeah, so that's the current market. And let's just step back for a second and let's go to the weekly chart, just for some perspective. So right now, even though it was a terrible close, the fall through day essentially failed because we closed underneath the low, the fall through day. So we're negative at this moment in time. Everyone should remember that we are still just in an intermediate correction in a bull market. That's what we know at this point. That's a fact. Intermediate correction, 8 to 12% is kind of your standard if you do it by percentages. But even looking at this, we've run up. Now we're pulling back. This is more normal if people go back and look at 66 through 1982. That's the type of market that you had. Can we quickly just go to 1976?
On which index?
Always relevant to go back 50, 60 years.
Give him some shots, maybe he'll pass out.
Dude, down, try it down.
You want a daily or weekly?
Daily.
And what
We'll go to 1976. Okay. So let's go to
Okay.
So 1973-74 was at that point was the worst bear market since 1929 to 1932. And you have this horrible bear market, and then you ran up, and then you have this intermediate correction there. Now go forward maybe 2 years. That's the type of mess that we could be in, but there are a lot of model I think that's not gonna work.
Stock picking
Yeah,
is gonna take off.
yeah. Which is why they need things like the growth report.
Is your mute on?
No, we're good. They can hear us.
IBD Live.
You want to turn on that video?
No, we'll just leave the, they can see the charts, right?
Yeah, they should be able to see the charts, but.
Yeah, we're fine without the video. They don't need to see.
They
it.
don't need it. They've seen enough.
The participants are falling off a cliff.
Okay,
Are they really? No, I'm kidding.
all right. That's all I had to say.
All right. Okay, for me, very quickly, it's pretty simple. Tesla. Let's go to,
Let me guess. Dan's in Hawaii and you're short Tesla.
I am short Tesla.
Good for you.
Everybody knows I'm short it. Tesla's acting terrible. That was a leader. Nvidia, we talked about Nvidia.
It's this close.
Yeah, this is not acting good anymore. I'm not short Nvidia. I don't have any desire, but to me, the leadership is just sorely lacking. So you should just be out if you don't have any desire to be short, which is fine. All right. Jim, thoughts?
I totally respect Webby's position that we are going to enter a secular bear market. That's very plausible because it rhymes. Inflation, rates, prior bull market. But I think that we are in a renaissance of innovation, unlike anything we've ever seen. I think we had Walmart in the 66 to 82 period. There was some other retailing concepts that worked pretty well. But I think that we're at a diametric change in the world with AI, autonomous driving. It's not today. And on top of all that, I don't think the time to get raging bullish is after the market's gone from the bottom of a C19 virus up 100%. I think the time to get really bullish is after you've had 31 months of muck. Now, I'm not saying to commit money, but I'm saying be absolutely ready to pounce. Keep it, like Webby said, buy list fresh right now is the most important thing you can do. Not to deploy cash, but at the end of a 31-month bear market, what is possible with a revolution in the biotechnology, everything, AI, autonomous driving. I think the opportunity is coming very quickly. I don't think we're going to have a 41-month bear market in small cap. Like that would be a world record by, 9-10 months. I think you need to be getting more excited the more this goes down. You should be praying for an absolute cataclysmic collapse. And I'll tell you that I think that this Israel, Lebanon possibly getting involved with Gaza is small fry. 500,000 people have died in Ukraine. That's a real war. What's happening in the Middle East is not a big deal. I mean, human life is terrible, it's being lost, but compared to the big game of war, this is a sideshow. I don't think it's going to expand. I don't think oil's going through the roof. I think it's going to get much better in many ways. I rest.
Irusha, last but not least.
Yeah, I would say that first, if it's been tough, if you've taken a bunch of losses, you definitely don't want to give up. You don't want to walk away. You want to still be consistent and keep doing that routine. Just like Jim was saying, there's a lot of innovation out there. Eventually, it's going to reflect into the markets again. So you need to stay positive. Do something fun during this time where you have a little bit more, kind of like us, stay around positive people and be optimistic on that. And then finally, I want to say hi to Matt Loker and TJ Way. Miss you too, and we'll definitely
They put us
never
in
see
the
them.
back. We got
Yeah, they did a lot.
2,200 people
Yeah, so
in a day
thank
and
you.
a half.
Yeah, Matt and TJ, well done. Cheers. If this was a success, it's due to you guys, and if it was a failure, you guys can.
It's
blame-
on you too.
I was gonna say they can blame me, but that's fine.
Well, I'm gonna just add one more thing, and it's just to reiterate what I know, Jonathan. So, take everything that you ever hear from any of us or anyone else in the cancer world with a grain of salt, because we've been trained by the best to be flexible. And if Bill were here, like we said earlier, he lived in the moment, but he changed in the moment too. So always be ready. As we always say, a new bull market is 4 days away, with a follow through. So you've got to be there. This is the perfect time to study, use IBD Live every single day. I think the team is just Excellent, especially the days that Scott's on. All right, thank you, everybody. marketsmith@investors.com. I know a lot of you had questions about Webby Screen. Send us an email. I apologize, we can't get to all the questions we had. Thank you. Have a great weekend. We will talk to you next week.